Hey everybody, good morning, happy Friday. All right, we're back. It's been a bit of a grind week. Markets are up a little bit this morning. I think that is something that gets faded. We'll take a look at that this morning. Here is screen share. Chat's up for everybody. And chat's open for everybody. Yes. All right. So good morning. What's happening, Eric? What's happening, Jeff? Good morning, Greg. Larry, what's happening? Market maker move crazy 81.86 right now. What? There's no non-farm payroll. I feel like that seems really extreme. Um, that does seem. I mean, I'm showing. Let's go SPX here. Is it still that high? 81.86. Are you kidding me? I mean, I don't know if that was. Are we fooling the option market because of non-farm payroll? 81.86. Wow. So Friday. Um. Uh. I mean, I don't. It's like we never know, right? The market's gonna start up here around 42 ish. Let me see what point five. We're still 0.53%. So the market's gonna push up to about 68.30 or so. Okay, so if we hit 68.30 and then fall back down, that is 55 points. That's retesting lows. If we rally up, I mean, we have to hit. Gosh, if that's right, part of me wonders either right at the open where that thing comes down to, or maybe the easy trade today is an iron fly. I mean, daily profit would make sense, but an iron fly would be kind of this huge trap area and see how wide it can go if you just like when the market opens, you sell a call, sell a put, and then see how wide you can go. Fudge. Um, I'm curious if it was maybe like a $250 to $300 risk on the day if I can get that to stay within that market maker move. 80 is a lot. 80 is a lot. VIX is at 20. I mean, I don't know. Anything can happen. I'm not sure how they're getting 80 today with no non-farm. I could see if it was a non-farm day, but there's nothing coming out on the calendar. So Bloomberg calendar for today, everything's been pushed. So like next week we have non-farm and CPI. This morning 8:30 a.m. I mean, we have the top of the hour at 10 o'clock. Inflation expectations for the U of M, consumer sentiment. That's it. I guess you see here Governor Jefferson speaking from the Fed. CFTC 330, CFTCL 330. Wow, that's a lot of speculative net positions there. I'm guessing everyone's long. Everyone's long everything for materials and commodities. But yeah, 81 seems really high. Um, Again, we could sit here and have this conversation and say, yep, 81, remember? And it went 150. I have no idea. But consumer sentiment at 10, yeah, I don't know if that's going to be enough to be a huge driver. I mean, to be fair, the market from an efficiency standpoint, we did have Tuesday would have been the inefficient day, right? So Monday was up. I don't remember if Monday was above. I'm pretty sure it was still within the expected move. Tuesday was not. So this was within the expected move. So I'll put a check mark here. So efficient, inefficient, efficient, efficient, right? So what's today? Well, I'd still bank on efficiency because that's typically what we get. But 81 seems a little excessive. VIX has been challenging. VIX has been, making higher highs and higher lows. It's been kind of a crazy week in the VIX. And, today, same thing. It's like I've got a chart alarm set here at 23 in case we poke fresh highs. My instinct today, and I know this isn't trading necessarily, but if we come up to this level, I'd like to look and see, like, could I fade something up here? If price is going to go and drift, it's like, could I fade something? I think that seems like a solid play. I also think that right now, even if this market were to pull back into this yellow box. I mean, I think 7,100 is hard, which is why we put on that little bonus trade yesterday. If I did like the 7,100, doing that little butterfly spread, risking, risking 3 to make 2 or risking 350 to make 150, but also having that $1,000 profit trap. To me, this just looks like right now, even with earnings season coming out, the market seems unimpressed. Mag 7 just reported. The only one that's not in there is NVIDIA. NVIDIA's at the end of the month. So February 25th is NVIDIA. That's wrapping up our week on the 27th. That's a Friday. So Wednesday the 25th is NVIDIA earnings. I don't think this market's going to stick around and just hold this level until NVIDIA earnings on the 25th. I think this market right now is there's deleveraging happening. Market is kind of organizing and orchestrating a little bit of a correction. So and here's not a bad thing. If the market is down, if it's down this way, that is certainly a lot more. It's not fun. It's never fun. It's not easy, but that is at least more organized than it would be if the market just dumps and then fills and then dumps again. Like that's what's not fun is when it's just these huge spikes in volatility. That's when option trades get blown out of the water. You've got volatility going nuts. That's where you got to do some serious like risk management. Market maker thinkorswim is more realistic 56, says Pete. Okay. That's fair. I am like I said, I'm curious on an iron fly. If we start here for the day, do we hang here? I mean, part of me thinks that we're gonna, get here. There is potentially this gap fill. But if we end up coming back down to the lows again, I mean, Thursday, Fridays, it's like Thursday, Fridays usually are making highs. Thursday made a low. So if Friday's going to continue that trend, it's like are we finishing the low point for Friday? That would not be fun. Does it make more sense? Yeah, the VIX at 20. I mean, 56 certainly seems more realistic. So Tasty is a little wild here. Let's see what we have let's see what ES is for market makers today. So I've got futures for today is 51.8. That's what remains. So we've got an ES around 50, 51 or 52. That's probably more in line with what we should see in SPX today. So on that note, I mean, if I can get a decent premium again, it's 80. We're probably not going to see it at the open. I almost guarantee you that when we go to SPX open today, this is going to dump very quickly from plus or minus 81, 86, probably dropping very quickly to like 45 or 50. Okay. So right now, here's your massive move, but this could also have been elevated from the VIX yesterday at the close, and this is all going to make a quick adjustment, right? I mean, Ivy rank at 29.8. It's like, I mean, this is high. This is VIX at 30, 40 when we're getting like an Ivy rank at 29.8. Like that's a pretty decent sell off. We're down 3%. So it's just, to me, it's wild that I think under the surface, it's like you have to have an aggressive rotation. You have to have aggressive. I mean, there's no way that this market as a whole, I mean, the S&P is down 3% and we have individual companies down massive, like 30, 40, 50%. But look at the sector performance and, energy materials. These are small. These are small portions of the S&P. But they are performing pretty darn well. And like I said, I don't think money is necessarily leaving the S&P, but it is a pretty obvious aggressive rotation. Now, also, as far as resiliency, I mean, the RSP is actually up pre-market. The RSP for the year is still positive. Right? This is RSP. Look at the difference. RSP for the year is actually up about 3 1/3%. Versus your SPY, which is going to be red. It's tiny, but it's still red. SPX is tiny, still red for the year. Like year to date, it's down, but RSP is up. So again, I just think that the rotation is obvious. That's where you're getting the most benefit from it is something like equal weight, where you take away all the weighting and all the concentration, and yet people still want energy. People still want this rotation. People want consumer staples right now. If we have a general, fall in the S&P, let's say the SPY and the large market cap weighted ones are going to fall. I still think this will drag an RSP, But RSP to me right now, it is a much better, buy the dip type trade with this rotation underway. And that way it's like you're not reliant on just NVIDIA and the Mag 7 stuff, right? So either way, here's my overall concern. I want to take a look at maybe some hedge positions, not expensive, but something where if we went out to maybe like the end of April, could we get a couple of really inexpensive trades where if the market does flush down here, that we could do a butterfly spread that pays us maybe 2, 3, 4 to 1, maybe 5 to 1. I'd say something where if I'm risking $200 or $300, could I make $1,000+ And all we need to see price do is somehow come into here, right? So it depends on how wide I can go on a butterfly spread. I kind of like the broken wing stuff right now to the upside, but I'm not going to take it for a crappy credit. Like I would be, I don't know. I'm curious coming into like March, April. I don't know. Are we going to take this long? Is this going to be just like a slow bleed through all of February? Is March, April going to be a correction time? Does it get worse in March and April? I don't know. All right. Let's see here. 44.96 now. Is that tastier futures? So I've got February 9th on SPX showing 113. February 6th are showing 81.86. Let's go Thinkorswim. Let's just get another reference point here. Okay, you got Tasty Trade. Really? Okay. I mean, I think 50s is fair, and right at the open, we're going to see it. It'll change. SPX option chain, yeah, plus or minus 50. It's 56 on Thinkorswim. And there is no non-farm today. This, like I said, with VIX at 20, that seems about right. Gamma level wise, pretty big levels. We're gapping higher, so I do wonder if we gap higher, are we going to fade back down to find these levels? This actually would be a very cheap trade today. If we're up here at the open and we try to do a butterfly spread down here and prices fall back down, that should be a trade that pays really well. Part of me wonders. I know I've thrown a lot of profit traps this week. It's kind of been exhausting. Like yesterday, putting on 5 trades, losing 4, winning 1. I still netted $100, which better than nothing, but still that was a really crazy day to be like, gosh, the only difference, I know I'm complaining. The only difference yesterday is that the pin price that I had at 6,800, it was a 10 wide spread. If I had done, and this is hindsight, of course, but if I'd done a 15 wide spread, yes, I would have paid a little bit more for it. I would have paid probably $1.20, $1.30 for it. But the difference of walking away from, the pin price would have been closer to like $1,200 or $1,300 in profit, which would end up netting me about $400 for the day. That would have felt a little bit more worth the effort than that little 10 wide that helped me at the end of the day, which, by the way, it still helped me. It still bailed me out. I still had a winner. But it just felt like a lot of trading for what I saw $125, $150 all day in profit. Like Blake and I were talking all day long, and it's like, yeah, I'm up like $125. I'm up $125. I'm up $110. I'm up 100 all day. And I even said in Telegram, it's like, look, I'm up $125. If you want to take the profit, win the day, it's not a bad thing to do rather than holding it to close for all or nothing. Well, I did hold it all day for all or nothing. I got a great pin price, but it just covered my costs. So anyway, see, I had 3 pin trades, 68, close all of them, good profit. That's awesome. Sweating bullets for peanuts. Yeah. No, it worked. It worked. It just, I wasn't heavy enough on the 6,800. 10 wide was enough to bail me out, but it certainly would have felt better to have a pin price like, 15, 20 wide at that level. That would have been a much better payout. But to be fair, it's like, it is nice to know, like, hey, look, I lost 4 trades yesterday, one trade, and I still made money. So, the lesson there is like, well, if everything is at least 15, 20 wide or 15, 20 wide on every butterfly that I do, it might have a little bit more full risk. But if I land one of those pin prices, those probably help me make, $300, $400, $500 in the day. But it's always just a trade. I mean, I would rather look if I can survive a day losing four trades, winning one. It's not a terrible strategy, because eventually when I get one right and we're landing a $1,000+ profit trap, $1,500 profit trap. I mean, what would have been lovely yesterday is if we came back up into that big nothing trade, right? That nothing trade, had we done that, that would have been worth $1,800. I don't care about the other four trades that I lost. It's like that would have helped me make closer to $1,000 yesterday. If we came down below the lows yesterday and we went to 67.70 or lower, that would have been worth another $1,000 to $2,000, up to $3,000. So it's close, and you got to give yourself chances when it comes to these profit traps. So anyway, thinking today, it's like if we start out here, is it possible that the market kind of gap fills and works its way to these highs? Is it possible that we work our way back to the lows? Like those two trades right there from a profit standpoint could be very cheap butterfly spreads. Okay. The one that's going to be questionable is, what do I do in the middle? Do I force a trade in the middle for some type of like iron fly that's more expensive, or do I just stick to the cheaper ones and try to get a net profit on the outsides? Right. So if I can take these two trades and one offers more profit and this one's a small loss, I take the net winner. That wouldn't be a bad play in my opinion today. If they're cheap enough, I wouldn't mind taking those trades. And then, daily profit play, if we have another day that's efficient, I want to see where we're at for the open, right? We calculate our market maker move highs and lows, and we just try to stay the heck out of the way. Okay. So we'll see. We got a few minutes before that opens. Let me bring up Telegram here. I know I had a couple of things to talk about. If you're in my Newsbreakers course yesterday, we had a great trade on Google. It was nice to see, even with the gap lower, it had a surging day yesterday and got us right where we needed it to be. So we had a 331 close on Google yesterday. We had a calendar spread that was only 42-cent debit, closed out for a 94-cent winner. So do the math on that. So 94 over 42. Well, I guess 94 cents minus 42 is we made 52 cents on a 42-cent debit. So we made 120%. Not bad. I take that as a pretty strong winner. And how did it work out? Well, we took the trade at 340, but the volatility was wide enough. Like the calendar spread is, if we have a vol crush, the way the calendar spread works is if this expected move is like Google's going to be way out here, right? That's what the calendar spread is for. And the reality was, based on this close and a rip back up, it was only about here. So what we did on the trade is the market makers produced like a very high expected move, and the actual price action delivery was very contained. That's a very cheap way to trade earnings. I mean, could it have paid a lot more? Sure. If I hold this thing to today and we're hanging out around 330, 335, 340 today, it pays extremely well. There's obviously a risk in that trade because if price were to rally up or fall back down and it gets close to these expected moves, you have like nothing to show for it. So it's to me, it's a very cost-effective trade. And they work. So especially if something like this, like the average earnings compared to what the market makers had priced in, it just seemed like a pretty good opportunity to take the trade. So glad we got a nice little winner there on Google. Close the calendar out for 102. Awesome. That's even better. So did you pay 42 for it? So 102 minus 42, it's 142% winner. That's great. Very nice. Let's see here. Vladi, 67, 15, 25, 25, 35, $1.65. Defense trades. Good. Nice. 3:55 p.m. Okay. Yeah, good. All right. What else we want to talk about? So that trade, I was looking at some hedges today. So Google win, possible hedges, profit trap bonanza yesterday. Still made some profit, lost 4, won 1, still made money. Was close. As far as like, I was really hoping for that like 68-20, 68-25 finish. That would have been a great day. I was obviously fine pinning at 6,800. Glad we added that in, but only going 10 wide, it was enough to offset, all of the risk. It's just, if I would have went 15 wide, that maybe would have cost me like an extra 30 or 40 cents. That certainly would have been worth it to get the extra, $300 to $400 of profit. But anyway, day is positive. I'll still take it. Give us a chance. Thoughts on big tech? Untouchable. I mean, the only time I'm interested right now, it's like I'm telling you, look, 2022. If you want an example of what this could feel like, look at 2022. What did Microsoft do in 2022? What did Meta do in 2022? What did Google do in 2022? What did Apple do in 2022? That is happening across the board. You look at Oracle, you look at AMD, Micron, like Palantir, like all these stocks that are starting to roll over. They're still, it's like the S&P is down 3%. This is nothing, right? If the S&P gets down to 8, 9, 10%, those stocks that have already been down will probably continue to go down. And we're talking drawdowns probably over 50%. So, yes, there could be a nice discount. There could be a huge buying spree. I'm telling you though, like this seems so disruptive. Where I mean, I've got a good friend of mine that keeps telling me like, Chris, IGV is going to be a great trade. I'm like, I don't know. I don't know. I mean, do I think this is an overreaction? Sure. But what if this thing is just setting up for a monster topper and we come all the way back down here to what? The 2022 bear market lows. I mean, sure, it's enticing here, but I don't know, these companies might never be put back on the pedestal that they've been on for the last decade. I have no idea. So it's like, I don't think that being a stock picker to hold some of these companies is really going to be worth it. I mean, it could be so much disruption on so many sides of the trade that I just think it's going to be an overreaction of either, things are ripping, like, right now energy's performing really, really well. Consumer staples is up as a defense trade, but software it just seems like I don't want to touch it. Mag 7, honestly, like stay out of the way. If Mag 7 keeps dropping, the S&P is going to go with it. The S&P goes down, broader market's going to go with it. So it just seems like this is either some type of, orderly correction for maybe 10% or so, and then the market bottoms out, we work our way through it, or this is going to be, what seems to be orderly at first and a little bit of distribution at the top, and then it breaks structure, and all of a sudden it's going to get a little bit nastier. But I would not be surprised at all to see like a 7 to 10% correction coming for the next like 30 to 60 days. And look, if I'm wrong, I'm kind of happy to be wrong, right? If I'm wrong, I'm happy to be wrong. And that's why I still warn, like, just be careful about calling the top. Here's a weekly candle. It's still, even though we had a bit more of a body to the downside here, where do we close this week will be a pretty big tell. Agree or disagree? I mean, if the candle is going to close with a red body like this is taking out last week's low, the week before that, that's 1, 2, 3, 4, 5, 6, 7, 8, 9. If we have a body that closes low, that's 9 candles where the structure is breaking, right? So today, if we hold here, then we're seeing the elevated VIX, we're seeing the markets bounce and try to make lower highs, lower lows, but it's a grind, right? It's like this just emotional little grind, but it's still making lower highs, lower lows. If we close at fresh lows today and this body takes out 9 weeks of chop, that has to have some momentum behind it. Unless this thing starts ripping back up next week, I think this is fade until this market's satisfied with some type of correction. So I'm just saying, like, be prepared for more downside. Technically speaking, right now, my probability is we're going to go down. Does that mean I want to load up on shorts? Of course not. It just means I want to have some cash at the ready and be pretty patient for better positioning. More with IBIT. I mean, again, like I said, somebody asked me that, and 60,000 Bitcoin, would that be a good spot to? I said, look, if you want to take a stab at Bitcoin, the last time we hit oversold metrics, we usually see like a 10 to 15% rally. That's what we're getting today. I would not say that that's the greatest bottom. It's probably not guaranteed. But if you want to take a stab at Bitcoin or IBIT for that matter, we're going to be up a couple bucks in IBIT. I mean, look, if you want to take a stab at this, buying here, if it goes to 0, that's my risk. It's that simple. If it goes to 0, that's my risk. Right? Like, I do think this is a risk on trade. Meaning if this is going to stay this way, look, it's an enticing level. I'm not going to lie. I'd love to get some 50, 60% discount on Bitcoin. But this does not look good at all for like, yep, there's the bottom. I mean, we're breaking major structure, breaking major support. So I don't know, man. I mean, I hate the entry. If this thing starts going all the way back up here, I hate the entry. Because if I get a pullback, like I'll take a swing trade. That'll be area 1. This will be area 2. But that to me is a lot less stressful than trying to catch it here and watch this thing keep going down. I don't know what this is trying to do. I don't know if this is a a painful lesson for Michael Saylor and everyone that leveraged up Bitcoin and tried to say this is the greatest asset ever. Just let's do financial engineering around it. Let's sell debt. Let's sell covered calls. Let's do all sorts of crap. It's leverage that is now being extracted from the system. So I think that trade is being punished so severely. And still there's a shakeout in gold and silver as well. So it's a spot to not be, I don't know, just don't be brave. Like it's not all in. It's like if you want to take a stab at it, take this thing to zero. It's like you're risking $3,800. If you can stomach that, I think the upside is fantastic. Right? We go up here, it's like if you throw in, $3,800 for a cash position, you're almost doubling that to get back to these highs, which is great. But I would be having to like embrace that risk. So anyway, all right, we have opening bell. Are we gapping higher a little bit? Yes, we are. Okay, so let's look at, I'm gonna look at like a gap fill around 80 or so. Let me see what I have on daily profit play today. So plus minus is down to about 52. Like we said, that's gonna be a big adjustment. Are we gonna have a lot of direction for a Friday? I don't know. What is so we open here. Part of me wants to put like a low trap, 67.75 or so, see if that's cheap enough. Then maybe like the 68.80. So 68.80, 67.75. I want to see if I can get something cheap enough right here. What would be this risk? It's a little pricey. I mean, I don't think I'm going to lose this necessarily, but $2,000 to make $3,400 is not bad. That's like taking the entire expected move and doing an iron fly. It's kind of a modified iron fly, but let me see. That's 42. Let's just go 40 wide, and this is 40 wide. So I'd be risking 2 to make 4. So it's a 2-to-1, but we got to stay there for the range. Let me look at a couple flies first, then I'm going to see if I can get my deltas. So let's go. I'll try 10 delta here. 10 delta here. Make sure I'm not getting any overlaps. That is 90 cents. I'm going to see if this will fill for $1. 69.15. That's pretty good. This one's not bad. I'm going to see if I can get a buck. Let's go $1.70. $1.70, 10 wide. Okay, so I've got a 10 wide in for daily profit play. You can go 5 wide and ask for $1. That's not bad, but I'm getting in here. So new trade. We're going 2.6. Uh, 6.925. 6.735. 6.7. So 4.5. 6.735. So $1.65 credit. All right, trades in. Okay, so I've got about a 11. It's shifted a little bit. Prices may be fading that initial open, but I did 10 delta put. There's a decent amount of space away from the move or the expected move, and then we have an 8 delta call. But $1.65 is not terrible. So I'm about 50 points higher to the upside, and I am 80 points lower to the downside. Oh, Jesus. There we go again. All right. Well, do we need some freaking defense today? Like immediately? Come on, man. Tech wreck, rattled markets. Why this battery could be primed for a bounce. All right. I don't know. Hopefully it's just like a big jump in volatility, but this market quickly fades. What's VIX doing? Dropping aggressively. Okay. Let me look at a couple of. I think I'm gonna have to look at some defense today. It's got to be cheap though. Defense has to be cheap. If I go 20, 30, 45, that's a broken wing butterfly for $1,000 profit trap. If I do 45, 30, and 60, probably cheaper to go 10 wide. So like 30 cents for defense isn't awful, right? That's $1,000 that covers my risk if I need it. I mean, I'd like to go just a smidge wider if I can. Let me see something. If I go 45, 45, let's see, can I get 1450 here? So that's 15 wide, 15 wide. It's not going to fill. 70 cents. Give me $100 on the day. Okay. So I'm putting in a defense trade. I'm putting defense for top. This is coming in SPX. It only cost me 70 cents. So I'm looking at still making about $90 on the day. So 165 minus 70. Oops. 165 minus 70. I'm still making $95 on the day for daily profit if I'm right. And I have potentially a $1,400 profit trap up above if we're trading around like 35, 40, or 45 today, if that's above my 10 deltas. So that's some defense. All right. That's not bad. Sell 6945, 6960, 6945, 6930. I got filled for 1430 credit. So this is 70 cents risk for 1430 potential profit and defense. Okay. And then if we came all the way, this would be dirt cheap at 75. This should be really, really cheap. If we did like 60, let me see what a put fly is here. So 65, 70, 90, 50, 50 cents or less. Maybe a little bit less. So that's 15 wide. If I want to make this really cheap, let's see. This might be a throwaway trade, but maybe even lower. So I'm at 45.50. If I went call side, sell the 50, 65 and 35. Yeah, like 10, 15 cents. I want this to be like so inexpensive. 50 cents. Let me see. Maybe it's cheaper on the put sides because of the premiums. So 55, 40, 70. 15-cent debit. Okay, I'm gonna put this in for 10 cents. If it gets filled, it's a $1,500 profit trap for 10 cents. It's not going to get filled right now, but I'm just going to let this marinate for a second. So right away, market's up. Let's take a look here. XSP at 686. We have some trades running on XSP. This is a monthly, so that's Eagle monthly for engineered options. Weekly at 90.91 for Monday. This is for Monday. These are all Monday expirations. 27th, 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 all monthlies. So we have 1, 2, 3. 3 of our weeklies are filled. And we have 3 of our monthlies filled as well. All right. What are my strikes for SPX? 15 to 25. All right. Potentially some upside risk, which would be a little bit annoying to see that thing threatened. But one thing to keep an eye on is today. So filled at $1.65. So 35, 45, 15, and 25. And here's DPP. So keep an eye on this. So defense 15 wide if I need it. Hopefully I don't, but markets seem to be, directionally trying to go somewhere. But we'll see. Let's plot some efficiencies. So I got the fly trade and the DPP posted in Telegram for daily profit play. The day isn't done. Okay. Now this one down here would be really, really cheap. Could I get this trade for like 15 cents? And again, like I don't want to eat up a bunch of my profit potential on daily profit play. Like $1.65 is I'm already walking away with like 95 cents. So I don't want to chew into it too badly. If we do end up falling, I mean, honestly, I could probably make this trade even cheaper for the defense side. Hang on a second. Let me put this back down to 10. If I can find something really cheap. So change that to 10. If I go 40, 25, or even 20, that'd be 20 wide for 30 cents. Make this even cheaper. That'd be 20 wide. So if I go 25 wide, I mean, that's way down there. I mean, price would have to fall way down here for that defense. I probably don't need to be that wide. So that's 15 wide. That's 15 wide. That cost me 10 cents. I'll throw 10 cents at this. Can it fill for 10 cents? All right, I'll let that one hang out. So basically that's playing some defense and we're going to threaten. I don't think that we will necessarily. Hopefully we have another efficient day. Looks like if anything, there might be some risk to the upside. 15. I mean, again, like just these 0.5% gaps are just so challenging. So I'm going to take my VIX is getting smashed here, but the recent VIX high was just above 20. So we'll go 20.17 on the VIX. This thing is retreating hard. So 20.17 divided by 16. So 1.26 today. Okay. Now, again, I don't know if this is the play, but this is my way of confidently calling the top. If we go here, VIX is around a 1.1, around 1.26% move. Can we rally from here? and go 1.26%. That puts us to a high around 69.19. Okay. So 69.19. That's a VIX at 20.17, and the VIX is smashing down pretty aggressively. Now, what this kind of hints to me is we've got to trade at 15 by 25, and then inside of that, I have the, this filled for 70 cents, and I'm covered just above that. So we have some defense. I just want to be careful on where I'm calling my top, right? So this one might be a decent play. 20 by 50, maybe. This will give me a break even at 69.40. Did I do that math right? 1.26 from the open. Yeah, I mean, 69.19, 69.20. I mean, this could be a good trade. If it offers I go for $1, but if it offers 50 cents, it's still a good trade. That's $1,000 profit trap. Let me see if this will fill for 50 cents. Puts my break even at 40. What would that move be, by the way? If we gap up and we go to 69.30, that's a 1.4% rip to the upside. Okay. That's going to be hard to do today, I think. I'll put this in for a buck and keep an eye on it. All right. So here are my thoughts on the day. Based on the VIX at 20.17, we should not see prices going higher than about 69.19 today. I happen to have my daily profit play at 69.15. So there might be a little bit more defense in here needed to, play around a little bit. So if I go, 20 by 30, like I could pull another $150 out of that bear call spread. If I go up here, another $1. Let's see. I don't want to overlap here. So that broken wing probably doesn't fill, to be honest. This trade for $1. I just don't want to put a bunch of bear call spreads and have this market blow me out, right? But it would be nice to grab. All right, that put flag got filled for 10 cents. Let me see if I can grab another credit here. If I go buy, sell, buy. All right. I'm just dancing around here for a sec. 30 by 40. Extra $1.25. I want the broken wing structure so badly just because it offers that profit trap. This is, I mean, I like the $1.10. I don't mind the, 240 credit right here. That's pretty decent as long as we stay below 69.20, but there's no defense there. So $1.80, I think that's a good trade. But it's risking $815 to make $1.80. Do I think it's a high probability trade? I do, based on my VIX calculation. But I have no defense beyond 69.22. I don't have any defense. So to me, it's almost better to get a butterfly in here. I mean, if that butterfly can fill for $1, I would consider taking it. We're trading at 60 cents right now. That puts my break even at 40. Got a profit trap in there, plus a pin price. I mean, that's enough defense. Let me see if I get 50 cents for this. Actually, you know what? Let's put it in for $1. So I'm not overlapping. All right, I'm gonna have a broken wing in there just above that 25 strike, and we'll see if price just kind of stalls. Right, based on the VIX, we should not see price going above 69.19 today. At the end of the day, as well, I could also, if we are ripping up here, I could try to do one of those late 3 p.m. sell trades and see if that will pay at the end of the day. But if we don't get there, then no big deal. Right. So what is the market doing? Well, looks like we're just coming back to fill that gap. So any upside here, okay, fine. Obviously, I want to see price stay below 69.19. I want to see it stay below 69.15. That's correct. Yep. So that's the summary for today. I need to see. So DPP. Oops. So right now, daily profit play, need price to stay less than 6915 and greater than 6745 for $1.65 winner. I have defense that is 6930 to 6960. So it's 14 1470. What was the credit we pulled in? 14 something credit. 1430 credit. Okay. So that, I mean, we're break even at like 6930.70. So if I put like 31 to 59, that's a defense trade that pays me up to $1,400. Okay, this one's offering 60 cents right now. Let me see if I can structure this trade a little differently. 30, 40, 55. I like the $1,000 profit trap. If this thing offers a credit today, I really do like this trade. I just need to see it offering a credit. So I'm going to keep an eye on this one. Maybe this can fill for $1. I just want to let's make sure I'm not overlapping. So I go 30, 40, 55. Right now I can get a 5 wide butterfly. This is a 5 wide broken wing butterfly that would be a bonus trap around 35. Break even would be 69.40. That defense offers, maybe $550 right now. But the 10 wide where I'd like a $1,000 profit trap, it's trading for a debit, which I don't want to take. Okay, let me figure this out. So I've got a 5 wide. What's that risk? Let me put this on here. So if I did 30, 35, and 50, so that's risking 940 to. So I'm trying to put in a bit more of a profit trap there if I can. If this offers $1, that puts my break even at 41. So, and that's right in the thick of this as well. So it puts a break even at 41. I have defense here pinned at 45. I think that's a decent trade. What I'd prefer would be, let me try this instead. Let's go. If I went 20 by 30 by 50, that puts my break even at 40. Could I get filled for $1 on this one? Fudge. I think it's just a little, like, the math isn't working the way I want as far as traps and defense. So 20 by 30. I could double up on this one. Nope, that's messy. So 30. I'll do this. I'll do the 30 by 45 by 50. Right now it's showing about 50 cents. I'm going to try to get this one filled for $1. Okay. It's not necessarily overkill. That way, if I get filled, it's a credit, not a debit. So I'm not taking away from my daily profit play. That puts my break even around 40, which I think would be a pretty tough get today. Okay. Actually, if I can take this trade now, it's trading for 40 cents. Let's keep an eye on this one. If this trades for over 50, 55 cents, I might just take it. That basically offsets my defense trades altogether, and I can still make a full like $1.50, $1.60 today for daily profit play for right. Yep. So the trades are posted daily profit play there, Mike. So SPX, the standard daily profit play, and the defense at the top is posted. I haven't been filled on the other defense trades. So the other one that got posted is a very cheap trade for 10 cents. So defense top, defense for bottom. So I did this one for a 2-6 expiration. And 2-6 expiration. That was a buy 6740 put. Sell 6725 put. Six, 7, 10 put. That's a 10-cent debit. For potential 14.90 profit. Very low probability, but very cheap. Okay. All right. I'm going to keep an eye on this potential upside risk. 30 by 40, 35 by 50, 40 by 50. All right. So defense here. Trading for about 40 cents. I'm not really interested unless this thing's trading over 50 cents. That's another 50 cents that kind of pays for my defense. I still think the markets will, hopefully stay here for the day. So we need price to stay below 15. Put a couple lines on this. If price stays below 15 there and above 60, oh crap. Sorry, that 69.15 and then 67.45. 67.45 is way down here. There. So price can stay inside that blue range. We got a full winner today on daily profit play. One thing that would be unpleasant would be price comes all the way back down here and fills the gap at 68, but we'd still be a winner. We'd still be a winner on daily profit play. So actually, I don't really care as long as this is don't breach, have a winner. I'm happy. All right. This butterfly I'd like to see fill versus just a credit spread. The credit spread is tempting. If I did this credit spread here, I can make another 80 cents. That adds to my winning day to push me up to like $200 on the day. There's just no defense on that trade. There's no buffer. My break even would be 6930.80. At least with a broken wing, my break even is going to be 40 plus. Just give myself a little bit more wiggle room. It's still working for 30 cents right now. Let's see. 30, 40, 9 delta. And I don't mind looking at like another daily profit play. I'm getting kind of greedy, but yeah, I'm just going to stick with what I have. I was going to say, I don't mind taking this trade like 30 by 40, 60 by 50. I just want to make sure my gamma levels are safe. So that's 83, 60 by 50. It's right there. That'd be 60 by 50. It's tempting to grab another buck out of this, but I don't think I'm just going to chill. All right. So pending order with a broken wing butterfly. Make sure these don't overlap. 30, 35, and 50, 40, and 55 don't overlap. Good. So keep an eye on these. It's a good idea to get a 7,000 pin broken wing for next week. So let's look at a couple things here. So 7,000. I don't know about a broken wing at 7,000. Just in case this market finds a way to recover, and that's I don't know. It's such a like shifty level. Like today, if the market is going to like claw back into here, and we kind of start, is Monday going to be like a resumption? I mean, Mondays are typically not directional days. So what would be nice would be if the market is up today, there's a little bit more follow through on Monday, Tuesday next week, and then maybe it rolls over, right? So 7,000, I just think seems a little tight to call that top. 70.50, 7,100, I don't mind that. That's a pretty big recovery, right? If we're going to get to 7,100, this market has to rally, 5%. Could it happen? Sure. Will it happen? Probably not. Not based on the option chain right now. So what I want to actually look at for the next maybe 30 to 60 days is what if we fall to like 6,500? If I do SPX, let's look at maybe, are we going to be down for February? Should I take this out to March? February is typically a weakness window, but there could be some follow through in March. So maybe end of March. What's the 6,500 look like? So if I went 6,500, we could just put a put fly on here. The premiums are probably decent. So 6,500, 50, and 50. Okay. For a dollar, for 75 cents, this trade could offer us up like $4,000 to $5,000 of profit. Like to me, that's a pretty decent hedge where it's like, look, for the next 53 days, does the market come down and fulfill a rising wedge bottom? I'd gladly throw $100 at that for that type of asymmetry. Now, let me build it out before I take that trade. I just think that's a pretty good hedge. I'm not saying we're going to make $5,000, but if we can turn $100 into $500 or $100 into $1,000, I would be super stoked to that trade. So if we build out a long put fly and I go to end of March and we're going to be down here towards like 6,500. So I'm going to sell the 65, buy the 64.50 and the 65.50. So that is 50 wide. Okay. Now what I want to look at is let's say this happens by the end of February. So February 27th. If we're remotely in that area, this trade should be up. I don't know, should be up 100+%. I don't love that, right? Obviously the point is like, let's try to get this thing to pay us a little bit more. Going into March, where does this thing start to swell? March. So if we're falling, gosh, it is like you got to time that thing pretty darn well, don't you? So by the end of March, if we're sitting there in that window, that's a tough one. Wow. I thought that would pay a little bit better. You got to almost be perfect on that timing. All right. Well, in that case, I don't really like the trade. I thought we'd have a little bit more. It's still if we're there, basically if we're in the 6,500 area, we're probably making 100% of the trade. But that's not really what I'm excited about. I'm more excited about, could I make like, 500%, 1,000%. But to do that, that's got to be very, very like perfect timing. That's the tough part. So I guess I'll pass on that trade. I'll pass for now. Are we going to slide down here to 6,200? Let's see. How cheap is it if I went 6150? Probably cheaper. Let's try it. So if I went 6150, this should be so cheap, by the way. 62, 6050. What? 50 wide. Ah, big difference. There we go. So for 30 cents, I can make up to $5,000. How much for if I went 100 wide? So 6150, 6250 to 6050. Cost me $1.50 to hedge for up to, a $10,000 profit. Let's see something. I might change the expiration here into April. Let's go end of April. So end of April, 100 wide for $1. And that is a cheap hedge. Let's play with this a little bit. Let's go to April 30th. Move this down to 6150. 6250 and 6050. Okay. So there is a butterfly. I don't like spending that much for it because it's a really low probability trade. I just want to see if we're even close. Like this one, if we're into, let's say we're in to our profit zone somewhere in like April. If by March, April, we're trading around 60, 6,500, 6,400, like it's cheap enough to make, 200 to 300%. So that's not awful, right? Like by April, let's say by the end of March, if we sniff out 6,200, this, $150 is worth $750. It's not a bad hedge. Pete says best not get down there. Okay. All right. So any thoughts on this? Like this is dirt cheap, and this is it's a low probability trade. I mean, the probability profit shows 7%, but if I can turn, $140 into 700, 800, $1,000, that's a pretty decent hedge to have. I don't need to go super, super big on that. Obviously, I don't want to just throw away like, oh, let's put $500 on it and try to make, $3,000. Well, the probability profit's 7%. So clearly the market has to have an agenda to go lower. And I don't know if it does. Like this is why it's a hedge. I don't mind the trade. I'm going to throw $1.25 at it and see. I mean, I'm willing to go up to like $1.50 on the trade. Could be a throwaway trade, like I said. $1.35. If it's filled for $1.50 or less, I'm okay with it. I'm going to go $1.40, $1.50. That's my max offer here. All right, 55 final. That's it. That's it. It's probably going to fill. Nope, it's not filling. All right, fine. Let's go $1.50. Actually, you know what? I'm going to put it in for $1. That way, if we rally a little bit, this might give us a cheaper fill. If the VIX goes down, this might give us a cheaper fill. So I'll try. This is I'm not. I mean, I'll put the trade in pending for me. You don't have to put this trade in with me, but I'm going to try to get filled for $1. And if that trade fills for $1, I'm risking $1 to make up to like $9,000, almost $10,000. But that's got to be perfect, right? That's got to be like end of April. We're inside that profit trap. That's going to be 100 wide. So from 60.50 to 62.50, I'm only paying $1 for that thing. It gives me a pretty wide net where if price is down into this area, so 62.50 down to 60.50, if we're even remotely close landing in this zone, before I'd say before end of April. So if we're in here before the end of April, there's hopefully some good profit potential. But I will say this: the reality is, this is probably where the market finds corrections. This is where the market's going to find some buying interest. It's just a nice pullback. The market broke it and yet smashed lower during Liberation Day. But if the market just kind of orderly, organized, falls down to this level, there's so much structure here to support this thing, and all we do is go back up. Well, now it's sideways, right? And then this looks like, okay, we had this huge rally. Now this is what we don't know. This is either a distribution phase where this market does break down lower, or this is an accumulation phase where the market breaks and goes higher. I don't know yet. Part of me wonders if it's a distribution phase, which is where this would possibly fall lower. Okay. Would a calendar double diagonal be better? Maybe. But then you want to build some type of calendar spread where you don't have any. You kind of build it where it's like you don't really want to have like the upside risk or the downside risk, right? You want to give yourself something that lets you at least walk away with the trade. Let's see. I mean, I guess what I could do, this is another way to think about it, would be if this trade were to offer up some type of broken wing butterfly and I build it where I have no upside risk, I have a profit trap here and I take on a defined risk. Basically, as long as we stay greater than 6,000, I think that's a pretty solid support level, right? So let me flip this around just a little bit and let me dance with this for a second. So if I did, I mean, if I'm going to do it, I might as well have it hang out around like 6,000. Let me build something out here. So pending at $1, I'll come back to that in a sec. Let's go like 60.50, 6,000. And then could I go here? Okay, like this trade, I mean, if I went a little bit wider, so I can pull in $1, but now I'm risking, damn, that jumps. Instead of the 5 jump, it's 10. So I'm jumping my risk up quite a bit. This one's not terrible. Let's go 6,000. That would be, 50 wide on the debit spread, 50 wide on the debit spread, 60 wide on the credit spread, which is why this would be a finance trade, like a broken wing. Could this trade fill for, I mean, $3 would be decent. I'd be risking 7 to make 3, but I have a $5,000 profit trap. Let me show you what this looks like. Kind of a crazy trade, but I think something to consider. So if I did I'm looking at this as like 6,000. So if I were to sell the 6,000, so I buy the 50, sell the 6,000, and then I create a width here of 59.40 there. So there's my broken wing. Let me know if this makes sense. So there's no upside risk on the trade. What I'm doing is I'm essentially calling support. Okay. So I'm calling support. I'm calling a bottom. That bottom would be 59.50. And what I'd like to do is right now, I'm not going to take the trade for 30 cents. Okay. If this trade could fill for right now, we're risking about, let's do the math here. We're risking from 50 to 6,000. So 60.50 to 6,000 is 50 wide. Okay. So this is a 50 wide spread. Let me draw this a little bit differently. So from here to here is 50 wide. From here to here is 60 wide. So essentially, I have a 10 wide risk, right? So my max risk is $1,000. Now, if I take credit, let's say that I can take credit of $3. That means that I'm risking maximum $7. So if I want to take this trade, I don't mind doing like a $4 credit. $4 credit, I'd risk 6, but I have a $5,000 profit trap. Thoughts? I don't mind throwing that trade in for a let's see what happens type trade. It might not fill. It might not fill. But I kind of like the idea of 6,000 to me is a pretty darn strong support level. If we hit 6,000, this market either has some serious problems or we have found, two decent levels to find some corrections. And like this area, I like that trade. Okay. Now I guess now that I'm like putting this in, it's like, should we put the trade expiration out to March or April, or should we put this out to like May or June? Because if we correct into 6,000 and get filled, I obviously want to give the price enough time to reflexively bounce off of it. So maybe this is best for like a June or July if I can build this one. So 60, 50, 6,000. Let me see if we can get the strikes here. So 60, 50, 6,000, 59, 40. Let's play around with the expirations. So April 30th in this weakness window. This one, let's look at May. So end of May. So I can sell. I can do the 60, 50. Now these are 25 wide. Let me go May. This is why we've been doing in waterfall income. We've been using the AM expirations because my strikes are more precise. So that's May 29th. Let's go May 15th AM or June. See what these strikes look like. Yeah, these strikes are way better. So 6,000. So I'm going to buy the 60, 50, sell the 6,000. That's 50 wide. It's going to make me go a little bit wider here. Okay. So this is 50 wide and 75 wide. I obviously need to ask for a lot more credit. So let's say that I ask for $20 would be, I'd be risking $500 on that trade. That's probably not going to happen. Let me do the math. So if I have 75 wide minus 50, so I have $2,500 risk in this trade. I need to ask for probably, realistically, yeah, I need to ask for like $15 or $20 in this trade. Let's see. I wish the strikes were just a tiny bit more precise. This one might be a little bit easier. So 50 wide and 100 wide. So could I get... This is crazy, but if I go, you know what, fill me for $45. Okay. $40 is probably realistic, which means I'm risking 1,000 to make 4,000. It's going to be, I don't know. It's going to be a lot to ask for. It's almost easier with the strikes in March, but I'm just trying to figure out how would this work with no upside risk. I've got 50 on the debit spread, 100 on the credit spread. So that's a 5K risk, and I'm trying to limit that. I don't want to risk more than $500. I think this is the trade. $45 credit. Now my max risk is $500. I'm risking $500 to make up to $4,000 and up to even $9,000 if I get a profit trap, which is kind of crazy. So I'll throw it in there. This is kind of a wish list type trade, but let's see what happens. So this is only going to take up about $500 in buying power. It's right now it's offering like $400, but obviously $400 to risk. If you're put this in at a $4 credit, you're risking $4,600, which is a no thank you. So I'm going to keep the credit in at $45. It's a bonus trade if you want it. It's interesting. Price is certainly going to have to sell off to like 6,000 or lower to give this one a chance. And if it does sell off to 6,000, then we can obviously revisit this trade and see if the strikes improve. Okay. If the strikes are going to stay like, 25 wide, it's a little bit tough to be precise, which is why I'm asking for such a big credit. Okay, so this is just a bonus trade. It's a hedge, a bonus trade hedge, SPX 618 expiration. I'm buying the 6050 put. I'm selling the 6000 put. And I'm buying the 5900 put for $45 credit. Okay. I know that's a wild trade, but if we were even offering for a split second $40+ credit on that trade, I'm probably going to take a stab at it. If it never fills, then no big deal. I'm going to tie up $500 to see if that trade is even worth a fill. So I can swing that for right now. Okay, I feel a little bit better about that as far as the hedge goes. I will still keep that butterfly spread out for $1. If it fills for $1, then it's risking $100 to make $10,000. Issue, of course, is that the timing of that is end of April. So if we do fill for $1, then we need, by the end of April, we need price to be making an effort to get down to like 6,100, 6050 or so. It's a June 18th AM expiration. Yep, correct. So that's the 618 AM expiration. Move this down to 69.15. See if that trade gets threatened at all. See if my trade for today. That's for today. This is still offering 45 cents on the broken wing. I like the broken wing. I just want to see this trade for like 75 cents or $1, and then I'll throw it in there. That'll be an extra way to kind of either one, add some defense, give me a $500 profit trap. It's not overlapping any strikes. I still have the 7,100 broken wing out there. We'll keep an eye on that one for the month of February. And then some waterfalls. We got filled on some waterfalls this week. I'll keep a close eye on those. Okay. So pretty wild recovery day. And I don't know if this is just like, okay, the market's had enough of a bit of a bleed out. Is this a encouraging sign? I mean, maybe. It's like we did test the 100-day moving average. There's buyers here. There's buyers here. But I just don't know if this is a short-lived rally. We did breach this structure. But like I said, on the weekly time frame, I think this is where we need to pay attention. So this week's close, look at where this market is. It is clearly a fight. We're talking weeks of indecision. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. We have 10 weeks of indecision. Right? 10 weeks of indecision. That's a lot. Right? I mean, Bitcoin, I think didn't we poke like 60,000 yesterday? We had a low of 59. I mean, we tapped 60 yesterday. So yeah, Bitcoin is up. I'm not excited. It's like, I think that Bitcoin has a lot to prove. If this is a, stab at it, sure. But like I said, to me as a trader, that's like, look, this is not a good looking pattern at all. So what I would say for Bitcoin is we have to find a way to probably rally here, pull back a little bit, start a trade, use the low as a second level. And if that breaks out, now we're talking, that's a great trade. That is a great trade in Bitcoin. Guessing that this is the bottom is not a good trade. Aurora says, I took the main trade for 225 credit. I mean, if you got 225 credit, that's way more than I did. I would take that down to like a 125 debit. If you're in for 225 out at 125, grab $100. Mission accomplished. That's my thought, at least. Yep. So all right, what else? Okay, so we got some crazy stuff going on. Daily profit looking pretty good. Day isn't done. Obviously, the day isn't done. Hanging out around the positive negative again. Pivot today. It's tempting. Like I threw out plenty of profit traps this week. It's Friday. I'd like to walk away with a pretty safe $100 today. I'd like to make a lot more, obviously, but um, I don't want to overtrade. So part of me is tempted. Let me take a look at today. Current price, 30, 40, 30, 20. I mean, if this gives me another $100, I might take this trade, but that's going to cut into my broken wing. I'll see. Let me try $150 credit on this trade. All right, I'm going to try for another daily profit play. Let me make sure there's no overlaps here. So our first one was a where's our first one here for $1.65? So 15 and 25, 45 and 35, 30, 40, 30, 20. So it's not an overlap. Should be pretty safe based on my VIX calculation to the upside. We shouldn't be breaching 69.19 today. And then it's a little bit lower on the put sides. So if I went 30 and 20, it's not an overlap. It's offering $1 right now, which isn't bad, but you're risking 9 to make 1, so it's a little bit backwards. So if we get a bit more direction, maybe it can offer us up like $1.25, $1.50. And if it does, I'll take that trade and hopefully add that to a win. So I don't mind like an extra dollar, but let's try to get like $8.50 to $8 risk if that gets filled. Check my working orders here. So broken wing. That one's pending. 30 and 40. I don't know if that's going to fill. Okay, I'm going to keep an eye on this. Either my broken wing or my additional daily profit play. So gamma is 69.10. Let's look at live gamma here for a moment. Should we flip it into today's DT should be like flat to positive. So we're at 68.60, which is positive gamma. Here's a 69.10, kind of a decent amount of call walls here. Big support around like the 68.35. Let me look at some dynamic trend to get some real gamma as well. Aurora, good fill, by the way. That 225 fill is excellent. So do we hit 100% ATR trade? That's 68.95. If we're just over 100% ATR, that's 6,900. So, I'm pretty confident that our 69.15 should be safe today. If we run into it, we've got some decent resistance up in here. So if we, fully fill this gap, which we did poke it. So if we go a little bit higher between, 6,900, 69.10, I'm not saying that's like the top, but we should be running into some decent resistance to finish the day. Nice, Larry. You got $2. Awesome. Good. All right. Let me keep an eye on my, that's my pending daily profit play. Pending broken wing butterfly. This one probably has a better chance of getting filled. Like I said, the issue is there's not really a lot of defense on the daily profit play outside of me putting in another like fly trap. Broken wings I like a lot because I can kind of call the top, put in a profit trap of $500, see if it helps. This one is a DPP. This one sucks. It's 10 cents, so it's not a big deal, but defense. That was a 10-cent throwaway trade. Daily profit play, top defense. Keep an eye on it. So 30, 40, 30, 20. I mean, the riskier side of me wants to take this trade with just the ability to make a couple $100 today. See if I went like 40 and 55, 30 and 15. Even that 15 wide's only offering 80 cents. Yikes. It's a little bit better. 35 to 50. Hmm. All right. Just kind of stacking up a couple pending orders. Sounds good, Jeff. Sounds good. Okay. Today, by the way, the masterclass for waterfall today is going to be at 2 p.m. I was originally going to do it at 1 p.m., but they put me into another webinar, so I'm going to be in a webinar from like 12:30 onwards. So I'm going to try to wrap up the webinar and go right into the class at 2 o'clock. Yep. So if you're in the class with me 2 o'clock today, we'll send the alert out in your classroom. You can also just click on inside the classroom. There's like live links and training. There should be an automatic Zoom session link. So for my services stuff here, so all the services, waterfall income, masterclass today. Okay. And if you want to become a member, jump on in. That'd be a fun class. We had I don't know, we probably have another like 50 members this week for waterfall. Honestly, in this environment right now, waterfall is probably going to be one of my favorite trades. You know, we've been giving ourselves some buffers. We're stacking up some pending orders. We've got some fills. Everything right now is giving us like 10 to 15% room for error, which I think is fine. We're also getting out of this kind of weakness window. So if the market has a flush, you know, February, March, April, whatever it looks like, our trades are out to May, June, July. So I think that's enough to help us find a bottom and get our way out of that trade and still make profits, but also have some profit trap opportunities. So if that made 0 sense to you, then just join for class today. Meeting next week. Yep. So that's a VIP conference. That will be next week. So thanks for reminding me. I know I'm traveling on Sunday, but so next week, Monday and Tuesday next week. It is a, you know, all access. Oops. All access diamond members. We have a Monday, Tuesday live event. So the event should be running mostly from like 9 to 5 each day. So 9 a.m. to 5 p.m. Eastern time. I will still be live. I'll be live 9 a.m. for a daily profit plan. Okay. I'll just be doing it from the hotel and then I'll go down to the conference and I've got my segments at like 11, 1, 2. I'll be there for Q&A. So I'll be there for the rest of the segments. That means that next week for any type of video updates, any type of posts, engineered options will have some new trades next week. Waterfall income, new trades next week. I will post a video update and give you a touch point in all those classes. Okay. So at least for Monday, Tuesday, and then Wednesday is my travel day. So I will be leaving Wednesday. That's my travel day. And my flights are kind of crappy. I only have one option to get out of Jacksonville, come back to Salt Lake City by like noon. So I believe I'll be leaving Wednesday morning out of Jacksonville at like 7 a.m. So I won't be live that day. And then I'll get home around like 2 to 2:30 p.m. Eastern time. So Wednesday, because of the travel time, I'm pretty much out of the office all day, which is annoying. But, you know, Blake, if you still want to I could talk to you, today. It's if you're comfortable running a session, I'd be happy to have you like step in and, you know, hang out with everybody for the day. And then we'll be back at it Thursday, Friday. So next week, the only disruption that I have is Wednesday, no live session for me because I'll be gone traveling. But then Monday, Tuesday, still running the sessions in the morning. Thursday, Friday, back, and I'll obviously be back home. Okay. There's both. If you are a Diamond member, there's both online and in person. I think in person, the hotel that they have us scheduled at, I think the hotel is full. I mean, it's Jacksonville. There's plenty of hotels around, but you can. I mean, if you're interested in being there live, you can check with the team if there's spots available. Online, same thing. Check with the team if it's still available. So give the team a shout. Support at prosperitypub.com or the number 904-706-3537 and just chat with the team. So online, I think we have like 300 or 400 people online, and I think we have 50 spots in person. So it'll be fun. I mean, live events are always a blast. It's a lot of work. I mean, we're bringing, I think 5 of us will be there. So who is it? Lance, Alex, Jeffrey, myself, Jack Carter. I think we're all there. So that's a lot, all in one space, all in one time. But it'll be fun. Hang out with everybody. Meet all the members online or in person. Great. So be a fun event. Not sure. Again, check with support because it's a whole event. So check with support on that. All right. Any questions on the schedule? So next week, travel day on Wednesday. That's the only day I'm out. Blake, you and I can talk offline, see if you want to jump in and run the session. Monday, Tuesday, I'll be live in the hotel. I'll just do it from my room. Should have decent speed to do it and run a stream. And then business as usual on Thursday, Friday. Okay. And then today, Waterfall Income, 2:00 masterclass. I'm doing a 12:30 p.m. webinar. We'll get a webinar fired up here in just a moment as well. Let me double check the trades here. That 15 wide still trading for about $1. I mean, I kind of want the trade. I just don't want to throw $900 out without some defense. So could I? Let's see if it pushes a little bit higher. So here's what I'll do. If this pushes a little bit higher, let's say we push a little bit, oops, wrong color. Let's say we push a little bit higher here. I'm going to see if that 15 wide is trading for greater than $1. So if it's $1.25 or $1.50, I'm still going to have that trade pen for a 10 wide daily profit play. It's going to be a add-on trade. And the reason why is if I can net out $200, $250 today, I'd be pretty happy with that. That helped me claw back. I mean, so net on the week. Tuesday I was down about $1,000, and again I kick myself for not managing risk better because I could have been down as little as $300. I'd actually be very profitable for the week if I managed that risk on Tuesday. But net, I'm probably looking at if I'm down $1,000. Okay, and then I can make, let's say I can grab 200 today. I had 100 yesterday, and I can grab. I'm trying to think on Monday. We had another winner for one something. What was my winner on Monday? So the second, we had a full winner for $1.50. I mean, so I'm down on the week. Like I'd be down about $500 for the week, $550 for the week. It's okay. Is it a great week? No, it's not. But certainly something that's easy to claw back from. And that's it. Like we got some other trades still running. I've always got trades running in the background, but we continue to grind. One profit trap would be awesome, but we can always line those up next week. What's the telephone number to get in Waterfall? Same, support at prosperitypub.com or 904-706-3537. So here is info for support right there. Call the team, 904-706-3537, or send a quick email to the team. Whatever's easiest. Okay. All right. What else? Trades to watch. Waterfall Income. We had some new trades this week. Daily Profit Play, Survive. Hopefully I can carve out another winner today. And I'd like to grab a little bit more if I can. I'm going to watch this one and see if this bumps up. My Broken Wing. I like this trade, but I like the trade. Um, I just don't get excited about grabbing 30 cents out of it when I'd rather have like 75 cents to a dollar. This one's okay if it's, I mean, a buck 50 is decent. I think that's a high probability trade. Plus, I have the $1,400 profit trap just in case. So we could be okay. Do your trades go out months out to expiration? Nope, they're just weeks and months. So it's next week Monday, and it's the end of the month on the 27th. So those are the trades I have running right now for engineered options. We have, let me check the spreadsheet here. So right now I have 1, 2, 3 trades open for the week. That expires on Monday the 9th. And then I have 2 trades filled for the month. So if the market, I mean, right now, if the market on XSP can stay above 686, we're actually going to make money on Monday. I will still lose. What's crazy is I could lose on 2 trades, win on 1, and still make money. So, I mean, I that's why it's engineered options. Like I build out my trade size, I build out my levels. So I hopefully can play a little bit of defense. And if we can still walk away profitable after the market's being down, I'd say that's a pretty resilient strategy. Yep. So I have 5 open positions right now in engineered options. There's a Google Calendar spread due today. Oh no, I closed it out, Gloria. That closed yesterday. I sent that out to newsbreakers. It was 110% winner. So let me see if it's still in here. Filled 94 right now. It's trading for. Did you not close it? I sent the alert out yesterday. We closed this yesterday for 94 cents. Somebody said they closed it for $1, $2.99. We closed it yesterday. So right now it's showing 15 cents. So it closed for 94 yesterday, which means, I mean, if you take a small loss on it because you didn't see the alert, that's not fun, but in what degree, Chuck? Going over it in what way? Like I can send a video update on our positions. I mean, we have lines in the sand. They're just credit spreads, man. So what I'd like to see for engineered options is, truthfully, on Monday, all I'd like to see on engineered options is XSP stay above 686. If we're greater than 686 on XSP, okay, let me go back to a 1-hour chart. If we can stay, it's very possible. Like I mean, obviously, if the Bears are in control, then this little gap fill today is going to get hit, and we're going to go right back down on Monday. And that's accepting the fact that, like, yeah, this market is turning over a little bit. But if the Bulls can kind of claw back a little bit more, and we have a high, low, and we're back to about like the 50%, that's enough to maybe get us a win on Monday. We still net profit. So I'm just going to put a line here at 686 because that to me is the most important level. The most important level is 686. Why? Because I can still net profit. If we stay above 686 by Monday, I can still net profit on the entire week. So that's really what I need. So the market can, have a run in here by, today and Monday, and we have a winner. I net profit on the week. I'm okay with that. It's not fun. Like we'd lose 2 and win 1, but we still make money. And that to me is more important. We do. And we have a 691. I have a 695. I have a 686. But the trade size, the way that I stacked into these, I can still net profit if we stay above 686. So that's by far the most important level. Okay, because that'll be the difference between me make or break in the week. So between 686 and a 691, okay, if we can stack 2 winners, the throwaway trade might be that 695, which I think is that's the top order is a 695. So 695, that was our participation trade, which I said like I was a little skittish of, but we still got it. So these are my levels. If somehow this market, musters up the courage to rally through today and tomorrow, today and Monday, if we can somehow get a winner, I throw away 50, I make 100, and I make 200. I'm pretty happy with that. Lose 1, win 2. That's a great week. Lose 2, win 1, still make profit. I'm still happy. I survive. Okay. But those are the 3 levels. So as far as engineered options goes, that's what we need. That's for Monday's expiration. I'm not sure how to close out the position that expired on the 9th. What trade? Are you talking engineered options? I'm not closed out yet. We don't have to close it out. It can be cash settled at the end of the day. The broker can close it for you. So if price is greater than 686, if price is greater than 686, the broker can cash settle that thing for a full winner. If price is above 691, the broker can cash settle that for a full winner. It's like we need price to be above for those trades to be winners, and you don't have to manage those trades. Okay. Now, if we're looking at like today, it's like end of the day. If we're sitting here above, maybe this one is profitable. This is a loser. This is a loser. Is it enough to still break even? We might make that decision and say, well, if I want to manage this trade, I can at least take a break even on the week and we can reset for next week. But I'm trading pretty darn small right now because I told you from the very beginning of this year, I am cautious. I am cautious. I'm cautious. And you can see why. It's like this market is experiencing a massive rotation, massive deleveraging, and the indexes are only down 3%, while stocks are getting absolutely rocked underneath the surface. And it's not like they deserve to be hit that hard. It's because, valuations are crazy high and the market's like, we're not impressed with earnings so far. So I'm just skeptical that like if the market's not loving earnings right now, the only other thing to save it would be buybacks. And if we're gonna be higher for February, it's gonna be because of buybacks. Because right now earnings have shown like a little bit lackluster. So anyway, I took the 2025 70 65 $1 credit, no defense trade though. Okay, Bill, that's still that's daily profit play. I mean that's fine. What'd you get for you got it? It's good, man. Five wide for $1. That's good. Yeah. So 69.20, that's a good strike. I think that's a great strike. Okay. $1 on that 10 wide again. 30 cents on my broken wing. I mean, I'm probably just gonna I'll pick one of the two. Like there's my broken wing, there's my 15 wide, or I'm sorry, 10 wide. This is gonna get harder to fill. This will be much harder to be filled. Again, I didn't put this trade in for 2. I hang on. That's a 30, 40, 30, 20. So 30, 40, 30, 20. Dollar trading for $1.10 right now. All right, I just want to make sure they're all one contracts. Ugh. How's the sound, by the way, when I'm talking to the microphone like this? For some reason, it kind of feels like therapy when I'm just like, I just need to make a point. The broken wing's probably not going to fill at $1. So if this one offers me a little bit more credit, I think I'm willing to take this trade. I am getting some gamma readings up into the 10 zone. So like 6,900, 6,910. Those seem gettable. Those were the higher levels on our pre-market gamma as well. So up here, 69, 10, 6910. So the question is it better to take another daily profit play, or if we hit like a 69, 10, 15, 20 to try to do a asymmetrical debit spread? That might actually be a better trade. In all honesty, that might be a much better trade. All right, we have some choices. Samir says, what surprised me is that high profile stocks are down, but index is managing to stay up. Yeah, but it's because of the rotation. This is what I'm talking about. The rotation into energy, materials, staples. Like these are some big companies. You look at staples. I mean, these aren't massive, but like you've got some pretty decent market cap in here. And these have been beat up for a while. And there's a lot of money money is staying in the market, but it's rotating away from large cap tech. It's rotating away from quantum computing. It's rotating away from just tech software. Okay. So that's what I'm saying. Like it's not a dump everything, sell all market. It's like there are better sectors to perform. And this is like rotation 101. I mean, it's like Energy is the physical AI, materials and industrials, the physical side of the AI. So rather than the hyperscaler tech side of AI, this is like, you know what? We need more energy. Period. We need more materials. We're basically seeing like a giant move to scarcity. And another example of how this is resilient is look at the RSP. RSP's at all-time highs again. So this is equal weighted. So the market's not crumbling, right? If equal weight is up and the S&P is down, it's like it's just because of market cap weight. So the rotation is pretty evident, but it's shown resiliency, and that's a good thing. It's obviously just, I mean, we will see if the market feels like the markets have been beat up enough, or certain stocks and sectors have been beat up enough. It's like, all right, well, let's see what happens from here. So, all right, crap, this thing's turning over. That was 68.91. All right, I don't think I'm going to get filled on my credit that I wanted. That was up to 90 cents or a dollar. Now it's down to 70 very quickly. Fudge to the muffin. All right, I'll keep an eye on it. Could I land? Yeah, I'm just my brain is thinking like, could I put some profit traps in today? Maybe. Trying to get something to kind of finish flat for the day. I mean, I have defense. I'd be looking for something in here that's relatively cheap. Maybe I could get a gap fill. If I can incorporate a profit trap like this. I don't know, is that drawing? That's weird. If I can incorporate a profit trap where here's where we started the day, here's a gap fill. I put a pin price maybe in the middle of that. 68.20. What's that look like? 68.20. So 30, 30. Nope. Where did we open today? We opened around 30-ish. Open around 33. So if it went 40, I mean, for a $1.30, get a 20 wide. Not a bad trap. It's just, I don't know if that's going to be a good trade. Dave, daily profit play, 180 credit, $1.50 debit. You're out. Okay, good. Started so easy, but the 10 delta, $1.20, sell for 30% gain. Yep. No, it's good. Okay. So right now I'm looking at a profit about $100 today. I'm trying to find a way to throw another $100 to $200 in it for profit without taking on the excess risk. So I like the idea of like a broken wing. Could I throw a broken wing up here and maybe get paid at 91 or 60? Let me try. I'm just curious. So we got the 15 by 25. If I did a 5, 10, 20, I mean, there's a little bit of defense there. But if price breaches, I mean, this would probably not be a good trade. I sold there. I could buy here. That trade's not terrible. That break even puts me around 69.20. Try this. So if I did this type of trade, for an extra buck, it's like I'm just flirting with like the lows of those gammas. I'm just gonna hang tight, show some restraint, show some discipline. I still got $100 on the day. That's fine. It's like any zero DT. It's like you walk away with $100. You're trading a couple contracts. Like one contract, $100 is great. So I think I obviously put in a lot of effort this week trying to land some profit traps, and more than anything, disappointed at like not getting a single profit trap on Tuesday, because that would have been the biggest difference maker to my week. Had I landed even a partial profit trap on Tuesday, I'm up probably $500 for the week instead of down. So that's the big difference. But I can't sit there and be angry about it. It's just how it played out this week. So all right, Let's see here. Blake. We ready? So let's run this. So let me see. I'll keep an eye on this one for the remainder of the day. That was a big drop, though. This just went from $1.10 down to 50 cents. So I think my opportunity to grab another $100 is probably out the window right now, unless price is going to, come right back up. So if we go rip up here, I mean, this market's going to have to grind higher for that to be the case. But the longer this goes for the day, the longer it takes for the day, the less credit it's going to offer. So this is very quickly trying to chew into this inefficiency on that first burst in 5 minutes. Like I said, it wouldn't be a huge surprise. So does the market come back and give it all back? Do we gap fill today? Maybe. But if it's just up and chill, up, chilling here, I mean, I don't know what the day is going to give us. We've obviously experienced a lot of volatility. We can take a look at the VIX. VIX right now is VIX has come down a little bit. So does the VIX take out this like 20.15 high this morning? Or do we just continue to see maybe the VIX just hangs out here? If the VIX goes back up, we're probably gap filling. If the VIX just stays here, maybe drifts a little bit lower, instead of chart alarm 1817, we might be making some fresh highs in the morning. So we've had quite the adventure monitoring the VIX all week. It's been just one of those weeks where like the VIX flares up a little bit, highs at 23. I always feel accomplished if I can sell some premium when the VIX is over 20. One thing I want to take a quick peek at here on SPX. If I go out to December, I sold some premium on the SPY for my project options eds. That was a $4.95 credit. If I go out to the end of the year, we had lows around 4,800, I believe. Let's go daily. So lows 4,800 on this SPX. So if I go out to 4,800, I'm just curious. 48.25 wide. I mean, I can still get. It's a little income trade. There's no assignment here. Let me see what I can get on the SPY. Because I always want to like repair. I mean, if I'm going to take the trade, I might as well give myself a chance to get through it and fight it. So let's go 480 SPY. Go 480 SPY. I mean, that's not bad. I can take the assignment there. Let me see, maybe a ratio spread. If I went 500 by 480 by 450. Something like this. So I do a ratio spread here. And then risk defined. Let me go 30. Get $100 there. 20. So what I'm thinking is this for a risk defined trade like I have in my IRAs, I can't take a ratio spread and tie up 40K in cash. So what I can do instead is give myself a little bit of a profit trap here. Here's $1,000 profit trap. Okay. I'd still be willing to take the shares at 480. So what this could do is if I take this trade for an IRA, I would fill it. So I have a $1,000 profit trap here. I'd own the shares at 470. It'd be like 468 right now. So I'd own shares at 468, which is below the Liberation Day lows. And I would at least hold 100 shares of my IRAs and then flip it, repair it, try to make a couple $1,000. So if I let this one run open, this just ties up the buying power. So that way I can take the trade, grab some income, only tie up about $3,800. That's a lot more affordable for me than it is to just do something naked on an IRA. Why don't you do the SPX XSP trades 3 p.m. or later? Because I'm not taking the trades all the time, Peter. I'm monitoring those. Like I don't have like, that's not a vetted strategy. It's like I've seen it play out. I've seen it work. But for every, one trade that I've seen pay out, I've also seen 2, 3 of them that don't work. So like I said, my way to kind of judge that trade by the end of the day is like, are we sitting near a high of the day that we end up fading? So, it's a good trade, but it's basically like you got to be comfortable throwing away about $100 a day at the end of the day. If I'm up $100 to $200, I don't really want to throw that away. Even though it's a good risk reward, I don't really want to throw that away if I'm up on the day. So it's just, one additional opportunity. All right. 68.50 iron fly, 15 wide for $14. Okay. Really? So you're risking a buck on that, Larry? Nice, man. That's good. Okay. When you pick a level for prop traps, how do you come up with the pin price? So a lot of my pin prices are based on the software that I use. Like this, if we're using pin prices, I'm trying to look and see like where could the market kind of stick to today. So, the market today, we have some gamma levels up here. We have the positive negative gamma pivot right here. We have the opening price and we have the gap fill price. So if I'm going to build out some profit traps and do kind of like the butterflies like I did a lot this week, if the market kind of hangs out here all day, this is a good spot to build a trap, right? Maybe trap this thing, pin it around 68.60, 68.55, trying to get like a good reward to risk setup. Like Larry, that's a great trade at, $1 risk for 14 wide. That's a great trade. Okay. So that's not a bad spot to say, price might just have like a big sticky point today. Or if we come back and we come all the way back down here to like either gap fill or close the gap, this is also a pretty good one to have. And then, of course, up here, if we're like holding near the highs. Now, I'm a little bit less convinced that the market's going to get to the highs and stay at the highs. So I think if I'm going to put anything trap-wise today, it's going to be in here. I put a trap on around 68.60 or 68.50, or I put a trap on, to maybe come back and fill this gap. Like this would be low. This would be like a tiny little dollar because it's going to be cheap. This one's going to be medium price. And up here right now with the market's up a little bit, this would be the most expensive one. So ideally, if I'm going like 15 wide, I don't really want to pay more than like $1.50 for that trade. If possible, I'd like to pay $1.50 max for a 15 wide, which gives me up to like $13.50 profit. Okay. And again, with these, if I did all three of these, if I put a trap up here and a trap here, it's like I'd be risking probably $400 to $500 on the day. So $4 to $5 on the day, and upwards of one profit trap that can land me, maybe up to $1,300. So if I can get one of them to pay me $700 or $800, and I take away, part of that risk, it's like I'd only be risking about $300 on two trades. I can win one, I can lose two, and I could walk away with probably $400 to $500 on the day. Like that's good. The issue, of course, is if I'm not like perfect on those pin prices late in the day and it slips through the cracks, then I'm still risking, $400 to $500 and I lose. So it's just a very it's a great way to kind of plot out your day, but it's literally like if you're going to hold them to the end of the day, it is an all or nothing trade. And if I wanted to do like the probability trade is we see that prices are going up, we see the gamma levels up here. The easy trade, this is kind of how I run my double up service, is like the easy trade would be you put in one trade for the day and you're in profit, right? Like markets are gravitating towards these gamma levels. So if we have price is going towards that area, this profit trap, if I just did the one trade, like this is going to be up some profit. Even if I was risking like $100, it's probably up $50. It's probably close to $100 of profit right now. Like that's a good return on risk. But if I'm looking for the big fat 9 to 1s or the big fat 10 to 1s or the big fat 15 to 1s, those come like at the end of the day and you got to be perfect in those traps. And that's difficult. That's a really difficult trade. But it's awesome when you can do it. It feels pretty amazing when it's like, I got that thing nailed within like 5 points. If you're 15 wide and you nailed that thing within 5 points, it's $1,000. So it's crazy how it works. But it is, if you join me for my live sessions this afternoon, it is like literally the final minutes of the day. Like yesterday when this thing was sitting around 6,800, I saw for a split second a $9 credit. I was in the trade for a 80-cent debit. I saw for a split second $9, and I don't know if I could have gotten the fill because I closed it at 8. I was hoping I could sneak it to 850. I didn't, but anyway, I saw for a split second there $9, and then it settled, and it would have been like a $730 winner, and I closed it for 720 manually, but still pretty good. So does that help? I mean, that's how I plot this stuff out. Is I just kind of find some levels that I think, what can the market do today? Market can go up, market can stay sideways, market can go down. But what I do bank on most of the time is the market will stay somewhat efficient from our daily profit levels and calculations. I never know how the market's going to finish. But a lot of times I will see like this pivot point between positive and negative gamma flows. It holds that level or hits that level a lot throughout the day. When we have gaps and stuff, a lot of times the market will try to find a way to get back to those levels and test them. Does that happen today? Probably not. Now we're looking at this gap got filled. This gap is available. So coming into next week, it's like, well, we could go up a little bit higher. And then if that rolls over, that gap's going to come back and try to get tested because this is a very inefficient open. We have a gap up, yes, but there's also a surge in futures. This gap up and that surge right out of the gates, this is just the market like pumping things up. So, it's a lot of trading. It's like you see this stuff. I've probably watched zero DT. I'm trying to think how many years now. Since 2022 zero DT, I've probably watched this stuff opening to closing bell. How many trading days? Let's say we have 250 trading days. 2022, 2023, 2024, 2025. So let's say 250 trading days times 4 full years. I've watched 1,000 or so zero DT trades. So I've seen this market kind of use these daily levels and use these sticking points and use these gamma levels. And, it's nice to have some butterfly traps to maybe pull in some higher reward, low risk trades. Okay, let me see real quick. I'm going to look at this trade for the SPY. So 490, 480, and 430. That's for $1.70. Okay, that's going to be an IRA trade. I'm just trying to get some added in. So when the premium's up like this at a 19 VIX or so, I'm going to try to sell a little. I should have sold some yesterday, but I wouldn't really grab a huge difference in premium. Let me go back to SPX for a moment. So that 10 wide still trading for 80 cents. I'm trying to get over $1 on that thing. Son of a gun. Let me try one more thing here. That would be 30 and 40. So if I went 30, 30 to 50, a little bit riskier. 30 to 50 and then start at 30 on the downside. 67.30 to let's see. Are we going to get up there today? All right. I am not recommending this trade. I'm not. Okay. But I'm going to take this trade for $1.60 and try to grab a little bit more profit on the day if I can. $1.60, $1.55. This is not going to be an official trade. I'm just going to take this one because I'm trying to grab a couple $100 on the day. Come on, $1.50. All right, filled at $1.50. So now, this one, 30, 40, I can cancel. This broken wing, I'm going to cancel. I've still got my profit trap for defense. 15, 25. All right, here's how the trade works. So 15 and 25 is my initial daily profit play. 45 is my defense trade. And then a 30 by 50 is another daily profit play. So like I said, that's a lot of risk. I'm doing 20 wide on the top. So I'm potentially risking on this trade up to $1,800, 1,850 actually. So that's probably stupid. If the market's going to blow through the upside, I'm going to get toasted here, but 69.30 I think is safe. So I'm obviously fingers crossed. So that's not something I'm going to recommend. I'm just taking it. I'm comfortable with the risk and I'll punch myself in the face if I lose. Okay. We'll see. I can offset a lot of the risk with that profit trap. Maybe throwing in another one just in case. I do have, so 55, 55, 35 would be here, and 75. I could throw in another defense trade, maybe. Maybe the put one would be cheaper. So if I went 55 by 35 by 75, if this filled for 50 cents Probably won't. But I'd be sacrificing 50 cents of this trade, but I'd be defending myself up to two grand. So I'll throw it in here for, it's showing 50 cents right now. Let's find out. Okay, I'll put it in here for 50. All right, prices are retreating a little bit. All right, come on. We got to hold it like, I mean, it'd be nice to see price. I mean, if it gets higher, great, but let me just keep an eye on something here. So 50. So I got $1.50. I need some defense. I'm going to sacrifice just a smidge. Let me go another 60 cents. No. We're not deleting anything, Gloria. I'm still in. I'm just saying I'm not taking, like, don't take that second daily profit play with me because that's way too much risk. Don't take the trade. Like, I don't want anybody to take the trade unless you're comfortable risking way more. Like, I'm risking $1,800 to make a $1.50. So what I'm going to do to offset that is I'm going to put in a profit trap of 2 grand to hopefully, you know, if I need it and I've got risk above like 45 or 50, I got to have something that lands me a big fat profit trap. So right now, I'm trying not to sacrifice more than like 50 cents in this trade. So I'll put it in for 50. That way, if I win the day, it's like so daily profit play, $1.50. And then my defense trade was 70 cents. So minus, actually, so it's $1.65. So original daily profit play, $1.65. My defense was 70 cents. Okay. Now I add $1.50 to that. So I can make $2.45 in the day. If I take this trade for a 50-cent debit, I'm minus 50 cents. I can still make $1.95 in the day and also have up to it'd be $3,500 in profit traps. So I at least cover my butt as far as my risk, but I need to see if this will fill for 50 cents. I'm not going to take more than that right now because I think this market could maybe flinch around that like 6,900 handle. Hopefully it flinches, stalls, and slides a little bit lower. Okay. So we shall see. And if that one doesn't work for defense, I can always look at those late afternoon, like let's see if I can get a debit spread that's cheap. Maybe try to grab a few $100. So right now, daily profit play is the same. Here's a summary, and then we'll fire up a little waterfall stream. So I have my daily profit play. So standard DPP for $1.65 credit. I put in defense for the top for 1430 credit, which is a $70 risk. And I put a defense at the bottom, which is essentially a 1490 credit, or I just did a butterfly spread for 10 cents debit. So 10 cents risk. So that's my trade. Okay. I have added a 30 by 50 credit spread. And I did another. So I added a DPP, but it's not an official trade. I don't want anybody taking the trade based on my typical mechanics. I'm taking the risk, okay, because I'm trying to make a few bucks today. So I did the 69.30 by 69.50 for another $1.50 credit. So what I'm looking to do is add another defense trade. So I'm trying to add another 50-cent debit defense trade. Make sense? So if I don't get filled on the defense trade, it'll fill at some point. Like if we stall and go sideways, it'll probably fill. So anyway, we'll see what happens. But if it does fill, then it gives me, a net 100 plus the other trades here. Like I'll be up about $200 on the day. It's a messy way to get it, but all in all, I still think we're pretty safe. All right. So we're just creeping up to these gamma levels. So 6,900, 6,905, 6,910. That should pretty much stall this out. By the way, the plus minus on the day, We were down to like 51. So it started at 81. Let's measure this out. So 68.16. Let's do 81 from here. 68.16 plus 81 points. That still puts us out at a top around 68.97. Keep that in mind. This market shouldn't go higher than 6,900. It shouldn't go there and stay there for the day. Right? We saw the plus minus 81, and then it switched to, Thinkorswim had 53. It switched instantly to open at 51. There's no way for price to really, from an efficiency standpoint, should not go above 68.97 to close the day. Okay. John says, if you're ignoring the defense trades, will the numbers give a net profit? Yeah, if you ignore the defense trades, yes. But the reason I put on defense trades is because just look at the risk reward profile. That's it. Like, I mean, this trade, look, let me see. My phone was doing an update yesterday, but I've got some screenshots here. I'll share this with you. I'm running so long today. Whatever. We're having fun, right? I let so Tasty Trade did a big study. Get out of here. Just get my freaking photos. So Tasty just did a big study, and let me look at their percentages. All right. So they did an Iron Condor study. And historically, they said that Thursdays have been the weakest day for zero DT condors. This is 2022, 3, 4, and 5. So this is like our last 4 years of zero DT, which I run these tests all the time. So Monday and Wednesday, like I said, like we tested, are still the most profitable and most probable wins. Mondays and Wednesdays are still the best trades for daily profit play. Thursdays were still profitable, despite they had the weakest day overall. Like there was the most volatility, most direction, but they still were profitable on the mechanics of a daily profit play type trade. So Thursday, Friday typically are kind of the wildest days, but Monday, Wednesdays are really consistent. We had higher implied volatility across the board in 2025, but Monday and Wednesday still had better days. So volatility doesn't really change much. The biggest win streak, and so here are the mechanics that they do. They do a 20 delta and a 20 wide. 20 delta, 20 wide. Okay. 20 delta, 20 wide. And they take a 25% profit. That's their mechanics. And there's no stop loss. So for the question that came up from John, if you don't use defense, if you don't use stop losses, you still make money. You still make money. So the simplest trade, and this is what I also teach in this class for daily profit play, the simplest trade is just to take your standard daily profit play and let the risk be defined and plan on winning the day. But those mechanically are going to be the highest win percentage if you take a profit target. So when you get into your trade, take a 25 or 30% profit target. Don't try to hold it all day. The reason I am doing this now a little bit differently, where I'm taking the trades at lower deltas, I'm putting on defense trades, is because I'm way more comfortable trusting that market makers at a 10 delta or slightly lower delta than that are going to maintain that efficiency within, like a 30 delta move is kind of standard. A 25 delta move is pretty standard. There's my defense trade getting filled. All right. I got some defense. I've got $3,500 in defense, and I've got about $1,800 in max risk. So I think I'll be okay if the price is going to get to the upside and start hitting like 30, 40, 50, which I don't think it will. I'm still looking at making like $200 in a day. I just got filled on the defense. Anyway, let me keep run through the slides. So who's in here that's like some of my OG daily profit members? A lot of you, right? We tested this stuff at length for many, many sessions. So let me keep going. So average P&L per day. Let's go here. Average trades to recover. This is why, I also choose to play defense. Average days to recover. If you take a full loss on a 20 wide, it's a 12, it's a 12 trade win. You got to win 12 times. We tighten it up a little bit where if we lose on like a $1 credit on a 5 wide spread, it takes us like 6 or 7 trades to win it back, typically speaking. Right. So I'm trying to make it so our recovery is a little bit faster, even though we acknowledge that we're taking more risk than reward. Let's see here. So average trades recovered was 12 trades. The the slowest recovery. And this is talking like literally getting back to your highs again. So if you keep like a track record, you give some back, it takes 12 trades to recover. The slowest period to recover back to your watermark highs was 40 trades, because you also took a stack of winners and losses in there too. So it is like this strategy is a grind, right? It's a grind. What else? Most zero DT strategies remain profitable in 2025. We experienced that. We had a lot of profits in daily profit play. We had a lot of profits in double ups. Iron Condors deliver the strongest combination of win rate and average P&L. Why do you think I take those trades? Bullish strategies are profitable but underperformed. Listen to this. Bullish strategies. So like zero DTE bullish strategies being like, I'll just do a bull put spread. I'll just buy a call. Unprofitable compared to Iron Condors. Crazy, right? Iron Condors are freaking awesome. Win percentage, 91%. 91%. If you use a 20 delta, okay? So a 20 delta still wins 91% of the time. A 15 delta wins over 91% of the time. A 10 delta wins well over 90% of the time. But what is your trade-off? A 20 delta versus a 15 delta versus a 10 delta, your credit is going to be smaller. Okay. This is why I also set the credit at a level that I want. I could automatically just take a 10 delta trade and I'd get, 60 cents. Well, I don't want 60 cents. Give me $1, right? Give me $1. I'll risk 4 to make 1. Let me win that $1. Let me win 80 cents of that $1. Let me win 75 cents of that $1. Okay. Here's a good example, and I'll let you go. Where is our daily profit play masterclass? Here. We did. Here's the math. Okay. This is our actual track record. And I just started looking at like, okay, let's say our average winners are this. Okay. So we had and I just use 100 trades. We've actually taken a lot more than that. We have over 500 winners in the service. Okay. So I'll use this here. So let's say we have 500 winners, and I think we're at like 50 losers, something like that, give or take. Because if I'm at 500 out of 550, I'm winning 90%. We're right there at like 89.4%. So that just for a quick example, that keeps the numbers nice. Now, if we do 500 and we're going to say average winner of $75 and our average loser is the full amount. Okay, let's just say an average loser is the full amount. So average loser is 400. So if I pull in 100 to pull in 100 to risk 400, but I pull every profit out at 75 cents, meaning like I get $1 credit, I close it at 25 cents, I make 75 cents a day, right? $75 a day. Can we make money? So 75 times 500, it's a lot of money. Okay, now losers at 50 of them, so 37,500. Did we make money? This is positive $17,500. So over the course of our trades, averaging a $75 winner, taking a full loss, never playing defense, you can still make money. And guess what you never have to do? You never have to worry about what the market's going to do yesterday, what it did yesterday, what it's going to do tomorrow. You just have to trade the day to win the day. Okay? So what's going to happen with quantum computing, AI, the software sell-off, Bitcoin? Who gives a crap? Trade the day and get a tax break that's, short-term gains at 21% versus 34%. Okay? If our average winner is $60, average loser is 400, are we still making money? For average win is 60. We're still making 30. Okay. And then 50. So we're up 10 grand. Right? So 400 times 50 is 2 grand. So yeah, we're up 10 grand. Okay. Average winner is 50. We're at 25,000 and 2,000. Average loser, we're still up $5,000. Okay. Listen to me. This is a strategy based on persistence, grit, and doing the math. I know that a loss is bigger than a win. but this trade strategy wins a lot and we can make money. So if our average winner is $50 a day, $60 a day, $75 a day, and what's even more exciting is let's say we let it cash settle. You know what? Let's say every trade we take, we get $1 credit. We let it go to 10 cents debit. Our average winner is $90 and our average loser is 400. What's our money? Okay, 90 and 500, we're at 45K. Minus 20, we're at 25 grand. Okay, it works. Does that make sense? This is with zero defense. Zero defense. Why do I put the defense in here? Why do I consider putting defense on my trades? Because if I can trim my losses to an average loss of $300, average loss of $200, average loss of maybe break even, because my defensive trades are bigger, right? A defense trade might land me a $500 profit trap. It might land me a $1,000 profit trap. I can offset some of those risks. Now, I'm not going to say that I'm going to do that every time, but there's a reason that the portfolio for daily profit play is up $81,000. There's a reason that our traders in the services members are making, $500 a day, $1,000 a day when they're comfortable with the risk. So it's just really nice to know like the strategy works. High volatility, low volatility, inefficiency to efficiency. This market likes to be efficient. Zero DT has provided an incredible amount of stability in the market. So the outliers that will happen, they happen. We've seen them. Tuesday was an inefficient day. What happened Wednesday, Thursday, and so far today? Is today efficient? Yes or no? So far today, are we efficient? Are we below this blue line and above this blue line? So far, yes. So are we going to flirt with 69.15 today? I mean, maybe, but I hope that we don't breach it. I hope we don't close above it, because that would be a move from the opening price. I mean, this move should be 80 points. 80 points. We shouldn't be going higher than this from the open, right? That's the gap from, or that's the close yesterday. If we take the 81 points, which seemed like a very high expected move, we take it from the open here, and we still go 81 points. We're right there at our threshold. That's why I have the blue line there. So market maker efficiency, we should see prices staying for as far as the close today. They should stay below 69.15. And if they do that, we're in good shape. Okay. Wasn't the move right? It was, but I'm telling you, man, like to be safe. I mean, you remember, this is a trade where you want to put stuff out of the money. So I've taken the 81 and I'm gonna bank it, because if we go only, I mean, the market, I mean, you said 56, but we moved 65. So clearly the market had some type of calculation. It was like, oh, what's efficient? Market moved up 65 points today. Well, I saw 81. So that's in my head. Okay. All right. Let's do this. We have a 12:30 p.m. webinar. I'm typing this to you, Blake. So no need to stream. If anybody would like to join me for a 12:30 webinar, just give us a little break. That way, like, we don't have to stream. Take a little breather. I'm going to get some coffee. I'm going to come back for a 12:30 webinar. Okay. 12:30 webinar. And then I will join that. So we're going to do a 12:30 webinar. I'm going to take that right into a classroom at 2 p.m. So 12:30 webinar on waterfall income, 2 p.m. masterclass on waterfall income. Okay. So if you'd like to join that webinar, it should be in my Telegram, but I can share a link to my public Telegram. Okay. Blake, if you find a link, awesome. Let me see if I can find it here myself. I don't know. You probably have that more than I do. I just see like the links for myself. Okay. All right. So really quickly, as we kind of wrap up today, I mean, again, we've been powering through a bunch of like 2+ hour sessions, which is anybody mad about that? Is anyone like, this Chris guy's long-winded? Or are we okay? Like, I could do this stuff all day. Right. So I'm hoping that it's a reason that, 300 people stick around for the day. It's like, we're trading, we're figuring stuff out. And I don't want to feel like I have to be forced to like, oh, let's stop here. And it's like, I like to figure it out. Let's trade together. Okay. Good. All right. So Blake posted that link there, prosperitypub.Wednesday windfall. Okay. Even though it's Friday, that's a weird title. You need 4 hour session.
I saw that too. I was like, wait a minute. I was like, is this the right link? And I checked on it.
I think that's because we did another standalone, so that's fine.
Oh wait, hold on. That's the wrong link. Excuse
Oh,
me.
it is.
It
Okay.
is right. It is the wrong link.
Fair.
What time did you say it was today,
12,
Chris?
12:30 should be the standalone today.
I'm not seeing that.
All right, let me see here.
I see a
Reminders.
class at 2 p.m.
2 p.m. Let me see. I'm gonna get Caroline on here. Caroline, uh,
Yep. So just
want to
ignore
share
that link. I'm gonna delete it.
12:30 p.m. Eastern Time standalone link. Okay. Give me, or if anybody else has it.
Jonah would probably have it.
Yeah, 12:30 p.m. Eastern Time waterfall income webinar.
Say worst case scenario, hit up Josiah, but I only ever hit the boss man up if it's an emergency.
Yeah. No, usually Jono has a link, Caroline has a link, Deanna usually has a link. Bitcoin up 10%. Yeah, this is all, I mean, this is good. It's nice to see the market at least have some fight in it.
Yeah.
I look, I'm still like a little cautious. I'd love to see the market, especially for engineered options. Wouldn't it be nice to see like today we have a nice little like thrust up. We're kind of hanging in there. Monday's a little bit more of like a drift up.
Like a 2%
Great.
up day today.
Like,
That'd be crazy.
I mean, just let the market. I can't. I'm
Oh,
still in
here.
session.
I gotta go
They were
start Market Masters. Chris, you can
all right,
if
man.
you need
I'm
me,
trying
just
to figure
message me
out.
on Slack.
I'll get this link. All right, thanks.
Okay. Yeah, no problem. I'm still here though.
Okay. Anyway, what I was going to say is for Monday's engineered options is if we have a little bit more of an upside here, where I mean, if XSP can be above 691, that gives us two winners. That'd be great. I mean, we lose one, win two, walk away nicely profitable on the week. I'm pretty happy with that. And then for the month, we're starting to get filled at like those break even levels. So as long as the market for February can somehow muster up the courage to fight back, it's like, you never know. So that's why I'm not like super geeked out and like let's short this thing. It's like, man, we have no idea. This market could be using this little dump and this little deleveraging, even though the market's down 3%. Some stocks have been beat up enough for like oversold, oversold, oversold. Is it a good opportunity for a short-term buy? Maybe. I mean, Bitcoin's up 10% today. Like clearly there's some interest out there like throwing some capital into the markets. I am still skeptical of the upside because I think that if anything, this market, rising wedge pattern breaking down, we probably fall. I think we have a 5 to 10% correction. I think it might get a little nastier if it does, but I just didn't love how earnings season kicking off this week with Mag 7 last week and this week, and the markets are like not loving it. So that does kind of piss me off. It's like, well, that's the market like telling us like, hey man, this market is not impressed by Mag 7 right now. This market is worried about CapEx spending. This market's worried about disruption in AI. This market is seeing another government shutdown. This market's seeing labor data that's softer, like crazy soft, and it's weighing on this sentiment. So it is what it is. And, we'll do our best to trade it and survive it and we'll be fine. What I don't love is watching the VIX go higher, right? Higher, higher, higher. And I mean, we're seeing it, it's crushing down today, which is a good sign. Okay, let me see. Oh, crap. So no webinar. Okay. So looks like the team might be putting together a Saturday webinar for me. So what I'll do is this. I'll wrap up the session here. And Waterfall Income students, here's the deal. If you want to join me for a classroom today as a Waterfall Income member, then you can reach out to the team right now. If you're interested, here's the quick elevator pitch on Waterfall Income. The trades I am taking on Waterfall Income, the strategy I'm deploying right now. Every week we are looking at prices, and I'm willing to go out about 10% lower. Give me a second here. Okay, so let's say that when the week starts trading, let's just use a weekly candle here. So weekly candle. So where the market opens, okay, I'm going about 10% lower. And the week before that, I'm going about 10% lower and 10% lower. So basically, think about this. If you could just put in like a 10% buffer and the market is doing this, this is always how I'm trading, even with Liberation Day. This is kind of what's cool about waterfall income. This is one of my strategies. So if you just imagine like we start at a 10% buffer and it's always going to be something like this 10% lower, 10% lower, 10% lower, 10% lower. Every week we trade. Do you see that this market typically, now granted here, if you're 10% lower, this market's going to be a little bit threatened, but the timing of our trades, as I mentioned, we only had one loss in here, and that was because we had some stacked up trades into February that expired in March. Okay. This is why I'm purposely avoiding the weakness window from February, March, April, because our trades are out to May, June, July. So as long as the price stays about 10%, we've been sideways here for 10 weeks now. As long as the market can stay above this 10% threshold by May, June, July, we're not going to have a single loss in waterfall income. And that means that also as the market goes higher, so does our 10% buffer. So this to me is like literally one of my favorite income strategies, my favorite swing strategy, where for a 60 to 90-day trade, I just plan on the market giving us full profit. And if I lose, I mean, the risk profile, like I'm typically risking, let's say I'm risking like 450 to make 50 cents to a dollar. Okay. So it's about 15% return on capital, 20% return on capital. But we've been doing a strategy 2, which helps me make up to $1,000 on top of my credit. So we could have a 2-to-1 reward to risk if we build out our profit traps. And we're also giving ourselves 10% room for error, a 2-to-1 potential trade with a steady income that is like 15% return on risk every single week. So what I'm saying is it's a very forgiving, very flexible, very reliable, consistent income strategy. So if that sounds interesting to you and you want to join that, you can do it. So you can give the team a call or email support@prosperitypub.com, or give the team a call 904-706-3537. Ask about waterfall income. And today's class is at 2 p.m. Eastern time. So 2 p.m. Eastern time. You can join me. Sounds like the team is going to get me. Nope. Anyway, so I'm going to do a weekend webinar. I'll be on Saturday for a little intro, but we'll do a masterclass today. And so that way we can have a little breather here. We've been going 2.5 hours for daily profit plan. So let's come back and just jump into class at 2:00. Okay. Groth, if you ask, I mean, just ask. You can ask if there's any promos running. I'm not sure. I'm sure they're typically running something like, I know the discounts it's down to like $14.65 or something like that. That's what I've seen. There might be some additional best deal discount or something. If you talk to the team, just ask. All right. Okay. So I have a little breather. We're trading at 6,900 right now. Markets hopefully are not going to be breaching. One thing I want to take a quick peek at is, we have the 15 and 25. I'm certainly hoping we're not going to be there on the date. Now, could I get this as a cheap? Nope, it's not cheap right now. I was going to say like a 10 wide defense to defend my 69.15. So I'm risking, 840 on this trade. All right. I'd hate to see the market today settle at like 69.15 to 69.20. I would hate that actually. What I'm going to consider doing is maybe looking at like a cheap debit spread. I don't know. I'll just let it play out. I think that there's hopefully going to be some resistance here. The market's already had a pretty decent move. The VIX is falling, but we calculated VIX out using that 20 handle, right? I mean, we're using this VIX. We should not see the market going higher than a 20.1 VIX allows. So 20.11 divided by 16, we shouldn't see more than like a 1.25% move. And right now, from the gap up, right here at the open, 1.25%. Is that right? Oh, that's the efficiency move. So we shouldn't see anything going higher than like, yeah, I said it, 19. 69.19 should be the top of the day. All right. So the day's not done. I will keep watching. I'll keep an eye on things. But if this finishes up here, it's like I need to have some maybe other measurement in to defend that 15 by 20 or 15 by 25. It's not a full loss, by the way. If we're at 19 for the day and we close literally at 19, I'm down $400 minus the $1.65. I'm taking a loss of maybe a couple $100. So I think overall, it's like it should be fine. It should be fine. So I'm not going to go crazy and just throw a bunch of defense trades in. I already have them in. If we breach the daily profit rate levels, I've got about $3,500 of defense up here, which hopefully will help. But I'm also thinking that 6,900 can hold, highs over here around 6,905. Let's see if we can just kind of hang out and struggle. I'd like to struggle at 6,900, at least for our daily profit rate today. All right. So anyway, crazy stuff. We'll keep an eye on the market for the rest of the day. Look at your Telegram for updates. We'll talk soon. All right. I'll see you at 2:00 for masterclass. Bye.